All right, welcome. Today, we are going to crack the code on the secret language of the financial markets. We're going to learn how to read some of the most powerful signals that are hidden in plain sight on pretty much any trading chart you look at, all by using what we call triple candlestick patterns.
I know what you're thinking. It sounds a little bit like magic, right? Can three little bars on a screen, three simple candles, really give us a clue about where potentially billions of dollars are going to go next? Well, that's the big question, isn't it? But you should think of it less like a crystal ball and more like learning to read the clues in a really complex but solvable puzzle. So what are we actually talking about here? At their core, triple candlestick patterns are just what they sound like, a specific formation of three candles, one after the other. Now, the reason we care is that traders have been watching these for generations, and they've noticed that certain formations tend to pop up right before the market makes a big move. They're clues, helping us anticipate what might be coming next.
Okay, so these clues basically come in two main flavors. First up, you've got your reversal patterns. Think of these like a big stop sign on the road. They tell you, hey, this trend you're on might be running out of steam and getting ready to turn around. Then you have continuation patterns. These are more like a quick pit stop, a signal that the market is just taking a breather before it gets back on the highway and continues in the same direction. Today, we're going to focus on those big turnaround signals, the reversals.
First up, we've got two of the absolute classics in the trading playbook, the Morning Star and the Evening Star. And I love the names because they perfectly describe what these patterns are trying to tell us. Either the sun is rising on a new uptrend or a night is falling on the current one.
The most important thing to get here is that they are total opposites. The Morning Star is our bullish hero, right? It signals that the buyers are about to take charge. It shows up at the bottom of a downtrend and hints at a reversal upwards. And the Evening Star, well, that's its bearish twin, warning that sellers are getting control and the price might be about to take a tumble. And here, you can really see how they're related. Look at them side by side. They're perfect mirror images. The Morning Star on the left, it goes down, it pauses, and then it goes up. The Evening Star on the right goes up, pauses, and then heads down. Now that little candle in the middle, that is the key. It represents a moment of pure indecision, a real tug of war where neither the buyers nor the sellers have the upper hand, right before one of them lands a knockout blow and the trend reverses.
So let's break down how to spot that bearish Evening Star. First, you've got to be in an established uptrend with a nice, strong green candle. Then you get that second candle, the small one. That's your clue that the buyers are losing their momentum. That's the indecision we were talking about. But the real clincher, the confirmation, is candle number 3. It has to be a red candle, a bearish one, that closes beyond the halfway mark of that first green candle. That's the signal that the sellers have officially taken over. And for the Morning Star, well, you've probably already guessed it. It's the exact same story, just flipped upside down. You start in a downtrend with a big red bearish candle. Then comes that small candle of indecision, and the final confirmation, a third bullish green candle that closes powerfully past the midpoint of that first red candle. That's the market telling you the buyers are back and ready for business.
All right, next up, we've got a couple of real heavy hitters, the 3 white soldiers and the 3 black crows. The names are just perfect because they create this image of an army of buyers or sellers just marching relentlessly up or down your chart.
Yeah, I love the language the source material uses here. It doesn't just call the 3 white soldiers a signal, it calls it a potent, in-your-face bullish move. You know, these patterns aren't subtle. They're not whispering a hint. They are a loud and clear declaration that a reversal isn't just possible, it's probably already happening. And the 3 black crows are the exact same thing, just for the bears. You can see it right here. Look at the 3 white soldiers on the left. It's just a steady, deliberate march upwards. Each candle opens within the previous one and then pushes higher. And the 3 black crows on the right, same story, but it's a determined march down. There's not a lot of doubt or hesitation in these patterns.
So how do you know you found the real deal? The rules are pretty specific. The second candle should be bigger than the first. It's got to close near its high point, which shows that buying pressure was strong all the way to the end. And that last candle, it needs to be at least as big as the second one. And, this is really important, it should have little or no shadow. You know, that little wick at the top? That tells you the buyers were in total control, right up to the final second. The 3 black crows follow that same logic, just in reverse. The second candle gets bigger than the first, it closes at or very near its low, and the final candle is just as big, if not bigger, with almost no lower shadow or wick. This pattern shows a cascade of selling pressure that just isn't letting up. Okay, our final pair for today is the 3 inside up and the 3 inside down. Now, if the soldiers and crows were this big, loud announcement of a change, you can think of these patterns as a slightly quieter, but just as meaningful confirmation that there's been an internal shift in how the market is feeling. So, again, we're dealing with trend reversal patterns. The 3 inside up shows up at the bottom of a downtrend and suggests things might be heading higher. And the 3 inside down, well, that's found at the top of an uptrend, and it's a warning that a drop could be coming. Now, this pattern gets its name for a really key detail that you can see here. The body of that second candle is completely contained, or inside, the body of the first candle. That's your first sign that something is changing. That first big candle represents the old trend, but that second, smaller candle shows that the trend is losing its power from within. So here's the story for a 3 inside up. First, you have a long, bearish red candle that's continuing the downtrend. Then, the second candle is a bullish green one that manages to push at least halfway up the first candle. But the final piece of the puzzle, the real confirmation, is that third candle. It has to close above the high of the very first candle. That's the proof that the buyers have wrestled control back from the sellers. And you know the drill by now for the 3 inside down. It is the perfect mirror image. You're in an uptrend with a long green candle. The second candle is red and bearish, and it pushes down past the halfway mark. And the final confirmation? That third candle closes below the low of that first candle, showing the sellers have officially won the battle. So, we've gone through the stars, the soldiers, and the crows. But here's the thing. Just being able to spot one of these patterns is only half the job. The real skill is learning how to put all these different clues together to read the market's bigger story. And that brings us to what is, without a doubt, the most important point of all, and it's summed up perfectly by this quote from Socrates. These patterns, they aren't guarantees. They are not foolproof crystal balls. The market can and often will do whatever it wants. Real wisdom in trading comes from understanding that these are simply tools of probability, not tools of certainty. So let's just boil this all down. First, remember that these patterns are powerful clues, but they are not certainties. They're a sign that the market's mood might be shifting. Second, context is absolutely everything. Always zoom out and look at the bigger picture. A pattern at a key historical price level means a whole lot more than one that just shows up in the middle of nowhere. And finally, use these patterns to build a case for making a trade, not as a blind command to just buy or sell. We've just decoded some of the basic vocabulary. You can now spot some of the most important signals the market is sending out. So the next time you pull up a chart, don't just see a bunch of lines and bars. Ask yourself this question. Now that you know the language, what story is the market trying to tell you?